Hello, extempers, speech and debaters, and everyone else. Welcome to the half hour. We are going to talk about a very controversial, yet I don't want to say like stupid, but like small topic today. But it is big for our nation. We're going to talk about the debt ceiling and what has been going on with that in the Senate and in the Congress and in our United States government. So most of you are probably going to be like, this is boring. I don't want to hear about it. And the other half of you are probably going to be like, I don't know what's going on. What is this? We are here to help regardless. We're trying to digest this topic so it's a little bit more easier for you all to understand, and I guess for the general public to understand, because when discussing this topic, especially on the governmental level, they use a lot of semantics and it's barely understandable. So we are going to talk about it today, and hopefully you have a better understanding of what the debt is, why it matters, et cetera, et cetera.
Absolutely. The debt ceiling topic is a pretty big one, albeit economics, I understand, can be kind of difficult to explain, and that's a lot of what we're going to try to do is make it understandable in a way that can really help you into creating these speeches. This is also kind of a good time to note that this is our first like real economics topic. Yes, we've had a podcast prior to this where we were talking about Bitcoin, but I would argue that in some way or another, Bitcoin is still kind of like a technology rather than looking at it from an economic standpoint. Like there's a lot of economic incentives that are involved with it, but all things considered, this is really like our true economics episode. And it's going to help test the waters. I really liked talking about economics in Extemp. It was one of my favorite topics because I understood how to explain it in a way that made sense. And that's what's going to be really helpful is understanding and getting that kind of justification of what exactly we're trying to explain and what exactly is going on. Because you could read a lot of news articles that say this is what's happening with the debt ceiling. And then you're like, but wait, I don't know what the debt ceiling is. And I think that speaks to both of us prior to researching this, YuYu, is we looked at this before. We were like, I don't really know exactly what this is.
Yeah, and I will admit straight up, we are not economic majors. We don't get involved with the material that much in terms of studying about it and understanding it. We hear about it through the news. I am a potential international relations major, and Spencer is a political science major. So while there can be like some involvement of economics in these subjects of study, it's not always there. So in terms of digesting the information so that you all can understand, we are like right there along with you, understanding it as well. So I think without further ado, we could just get right into it and try to unpack everything and understand.
Absolutely. And one more thing. Yes, I am in HD on YouTube. The camera, I'm recording in the studio library that's on campus for the University of Wyoming. It's actually pretty cool. Admittedly, we were just talking about this beforehand. This camera is unforgiving. You can see a lot of cool features on my face that I wish I did not have, but that's perfectly fine. But nonetheless, I guess that's the benefit of recording in an actual like podcast studio. It's really nice, but I'll have to start like thinking about how to take care of my face a little bit better. I think that's a good idea. Anyway, let's delve right into the topic. And I'm going to just go through like the basic definitions and what you need to understand about the debt ceiling. So I think the most important question and the most imperative question to start with is, what is a debt ceiling? And ABC 7 News in Chicago describes it perfectly. They state, quote, the debt ceiling is a cap on the amount of money the U.S. government can borrow to pay its debts. That's pretty simple. Our Congress is basically, in essence, spending more money than it typically is allotted. And the debt ceiling is the amount that basically other countries can purchase of our deficit to be able to fix the problem that's happening right now. So usually what happens is the US ends up with a deficit, or if you put that in an extremely simplified term, that's an amount that is uncovered by the government's budget. So the government, what it does is it spends more than it actually earns in taxes. So when it takes in so many taxes and it spends more than the amount that it gets in, it ends up with a deficit. And part of what this is kind of like a balance sheet reduction. What that means is over time, they try to make a balance sheet balance by having more debt to be able to pay for its deficit or for how much it overspent. So in order to cover its deficit, the government issues what is called a bond. Okay? A bond is essentially like an IOU. People, companies, or even countries can invest in these. And each bond has some kind of interest rate that the government will pay back after a given amount of years. For example, and this is not like a real example that's there, but you can invest in what would be a 20-year bond that has a 5% interest rate. And basically, after 20 years, the government, however much money you put in there, the government pays you that plus a 5% interest rate at the time that you have put in that bond. So if I was to go in and put $100 into a 20-year bond, I will actually receive $105 back. The paying back of the bonds from the government is the government's debt. That's the keynote of the debt ceiling and what debt is. It's the government paying back the bonds that people have invested in. So the debt ceiling, just to recap, is the amount of money that Congress can borrow or use as an IOU. If it hits or surpasses this limit, the government will then turn into default, or it will default on its debt. We'll explain that here in a minute. This is something that's really important. Not all debt is created equal. Okay? So your debt that you have, for example, on a credit card is very different from that of your student loan debt. Okay? Student loan debts can take a very long time to pay off because it can be a lot of money. And in comparison, the debt that you have on your credit card, yes, can also take a very long time, especially with how much interest rate is charged with credit cards. But typically, student loans take much longer to pay off, which is a really good example of debt not really being equal. The federal debt is kind of the same way. It's a really big challenge that we see right now. And there's a variety of different types of debt that's involved in the government. It's important to remember that people and companies can also put money into bonds. It's not just countries. Yes, we hear a lot about how much the European Union is invested in the United States deficit through bonds and how much we're going to be paying them back. We also hear quite a bit about China with this topic. But remember that people and companies can also put money into bonds. So you and I can literally take money out of our wallets and go and put it invested in a bond, and we'll get money back after a set amount of years. That's pretty imperative. So what we look at that with is typically this will be a lower amount that needs to be paid back versus a country that invests a ton of money into US bonds. So the government could, in essence, pay off people's bonds or even companies' bonds early rather than later and keep the debt ceiling the same. They don't really have to raise the debt ceiling. Instead, they could pay off in, for example, a proposed budget of people's bonds early. So if I was to invest that $100 and let's say it is a 5% interest rate, instead of it being a 20-year bond, they could, in theory, after 15 years, give me my $105 back now. And that's one way that you could pay off debt. It is a very easy way to look at that problem. But there's a really interesting argument that's proposed by a very well-known economist by the name of Paul Krugman. Paul Krugman is a Nobel Peace Prize winner in economics. He won it in 2008. And he used this example of you can use debt to pay off debt. Okay. And the example that I provide on my notes is it's like a process that many Americans use to pay off credit card bills. Instead, they just use another credit card. So the United States, in theory, could pay its own debt off with more debt. I'll let you figure out how that can happen. That's some really good research for you. There's a lot of good info there. So if the United States was to default, what does that exactly mean? Well, first and foremost, let's put this into perspective. The United States has never defaulted before. And a default, in short, is a failure to pay back debt when it is due. The truth is the United States has already technically broken its debt ceiling. The debt ceiling was like $28 trillion in debt. And I think it was like 28.4 trillion was the last time I looked. So truth be told, it really has already broken the ceiling. It's just really on edge with where it's at. It's either that or I got my numbers backwards. But if we were to default, this basically means the United States would not be able to pay back its bonds to the people who have invested money into them. So my money that I put into a bond is not going to be returned to me. The New York Times explains what would happen under our current Secretary of the Treasury, Janet Yellen. And she explains that if the debt ceiling isn't raised, we would be in a real problem, like a real economic recession. The New York Times wrote, quote, Ms. Yellen told Congress that inaction could lead to a self-inflicted economic recession and a financial crisis. She also said that Social Security payments could be delayed. Soldiers would not know when their paychecks were coming, and interest rates on credit cards, car loans, and mortgages would rise. So if you really think about it, though, have you read a news article that has recently stated that we have just got out of the recession that we are in? And the answer is no. We are still technically in the recession of 2020. Okay? And what would happen is if we were to default on our debt, that would create a recession that's basically on top of another recession. And that could lead us into a situation that is more catastrophic than that of the Great Depression. Now, that's a hypothetical, but that is something that is important to observe. This is actually a very dangerous issue. If we cross the line too far, it's definitely a real problem. But the New York Times asked another question that is actually pretty important. And this will transition into YuYu's just a little bit. Why do we limit the amount the US can have borrowed? Why do we have a limit on the amount that the United States can allow for people to put in bonds? The New York Times wrote, quote, according to the Constitution, Congress must authorize borrowing. The debt limit was instituted in the early 20th century, so the Treasury did not need to ask for permission each time it needed to issue bonds or pay bills, end quote. So it's actually a way of making everything easier. The debt ceiling is there to, instead of the Treasury coming to Congress every time there's a new bond, instead there's a debt ceiling on the amount that can be borrowed, so that way there's no need to have permission. Congress is the one that authorizes borrowing, so they're the ones that can raise the debt ceiling accordingly. That's where we get into that political narrative and that political trouble. So in essence, it was designed to make the process easier. But over time, however, The problem has become a partisan issue, which it shouldn't be. The health of the economy is imperative to the health of the individuals living in it. Having such a catastrophic impact could lead to a massive implosion on the US economy, which truthfully makes the debt ceiling a scary topic. And YuYu, while we're really looking at this, like, I understand that some people may not find this topic to be very interesting. This is a real problem. Like, if this isn't an issue that's fixed by even the time our podcast goes live, right? Which I guess it is important to note this is a changing topic and some things can happen by the time this goes live. It's really important to note that this can create one of the worst economic situations the United States has ever been in.
Yeah, and that's really kind of the meat of the conversation when we are talking about the debt ceiling and whether we're going to raise the debt ceiling or not. And if we fail to raise the debt ceiling, there's a lot of implications, as Spencer has mentioned. But then again, it leads to the question, like, then why aren't we raising the debt ceiling if we already have the capabilities to do so? This is where I come in and explain to you that because of polarization in today's world, it is a more complicated process than you would think. So that's why we dive into the question of what is going on with the debt ceiling and why can no one make a consensus on what to do. Mind you, I will fairly keep this short because there isn't much to what's going on right now. It's a pretty simple problem to digest, and it can be hard sometimes because of the semantics they use and because of different reasons that don't relate to the debt necessarily on both sides of the spectrum. So first, it's important to understand that the US government has to spend money on both mandatory and discretionary spending. Mandatory spending is set. So the amount we use for Social Security, Medicaid, unemployment, etc., is not debated in Congress every year or every fiscal year. But what is debated in Congress is discretionary spending. And so because of how much we want to accomplish, parallel to how much we bring in through taxes and everything, it requires the US government to go into debt because we simply don't have the money to accomplish everything that we want. And so when we don't have the money to pay for things that we want, then that's when you get delayed Social Security payments, possibility of economic recessions, etc. And recently, Biden's $1 trillion infrastructure plan passed in the Senate, and that's going to require going into debt in order to see the fruition of his infrastructure plan. We have not done a podcast episode on the infrastructure plan, but if you do, let us know. Anyway, that's a small side note. But this is not to say that Republicans also haven't spent a bunch of money either. Like, the debt, as we have seen, is not just caused by one party, because we have had party switches in the past and they have spent money. Like, it's just how it is. Both parties spend a whole bunch of money and debt is going to exist. So I would like to also put in another side note, just make the distinction between the deficit and the debt. So our federal deficit is our yearly debt, but the debt itself is the accumulation of debt throughout the years. So think of it as like the deficit is a tree and the debt is the forest that the tree is in. So at the moment, the debt ceiling has already been hit, as Spencer mentioned, but it was put on a 2-year extension in 2019. So it really matters now because the deadline is approaching and they really need to figure out a solution. For the moment, though, the Treasury is dealing with it by using what they call extraordinary measures, which is just a fancy way of saying other maneuvers that allow them to shift bonds, to suspend some spending, like to state and local levels, and also just finding funds from elsewhere in order to pay back their bills. Another thing is that since the end of World War II, the debt ceiling has been modified by US presidents at least 100 times, or just generally the US government. So it should be no big deal. But the problem doesn't lie in should we raise it or not. It's how should we raise it? And by that, I mean, Republicans don't want any part in raising the debt ceiling, but Democrats still want to pursue bipartisanship, or at least 10 Republican votes on raising the debt ceiling. Both sides have spent a lot of money in the past 2 years, and that's mainly the reason why Democrats want bipartisanship in this decision. For example, We've spent money on military, on COVID relief funds, on international COVID relief funds, and more. Senator Mitch McConnell, leader of the Republican Party in the Senate, or the minority leader of the Senate, has told Biden that the Republican Party stance is clear, that if the Democrats want to govern alone, then they can raise the debt ceiling on their own too. It's paraphrased, but you can look up the quote yourself. It's in a bunch of news articles right now. So what we're really seeing here with the debt ceiling crisis is it's a partisan issue. Not both parties are on the same page about it, and Republicans are unwilling to support it because Democrats are controlling both the House and the Senate, kind of. But other than that, there's not much to it. We are running out of money to pay the bills. And most likely, if we cannot reach a consensus, then we will delay paying our bills. And that would have effects on our GDP, our interest rates. It could also damage the legitimacy of the dollar in the international community and more. And that would affect our economic standing in the international community. It could also lead to a government shutdown again, because they really don't have any more options. So if they can't raise the debt ceiling or suspend it by October 18th, when the suspension expires, then that means people really aren't able to get the money. Like people working in the government aren't able to get the money because the government doesn't really have that money to spend on them. This could lead to a recession as people aren't getting the money they need through unemployment, Social Security, COVID relief funds, checks to teachers, federal employees, et cetera, et cetera. And as most news sources and analysts suggest, it would be economically catastrophic because of these events. So the options that they could pursue is just raise the debt ceiling themselves or still fight for partisanship or bipartisanship in Congress. But we will see how things pan out in the next couple of weeks. Biden is really pushing the Republicans to be more accepting of the bill so that they can both have bipartisanship and raise it together because they have both spent a whole bunch of money. But overall, it is really an issue of polarization in the United States.
And yeah, it's a polarization issue that really shouldn't be polarized. And I think that needs to be very clear because we mentioned a couple of weeks ago that the Republicans would probably in 2022 make an argument of that the economy needs a lot of help as a way to be gaining some seats in the House or the Senate. And this is not putting the health of the individuals up front. We do have to remember that the economy does play a significant role in the health of individuals. And if we're continuing to play a political game that can lead to extreme economic consequences, then we're really in deep trouble because we have to find a way to fix this issue and to have some kind of bipartisanship in order to save not only our economy, but our society from having real detriments. And I think that's a big takeaway here. Health of the economy is the health of the individual.
And that takes us to the questions that we have from Extemp Central. The first question is, should the debt ceiling be abolished? And Spencer, you can start this one.
All right. Here's kind of my 2 cents here. I think that this has a lot of reasonable applications. The debt ceiling being abolished is probably a very good thing, all things considered. But here's kind of the reality. It's really not going to be abolished. And I think that people should understand that because it takes a lot of it's going to take a significant amount of bipartisanship and willingness from Congress to do it. And if it becomes abolished, then you're back to what's just written straight up in the Constitution, which is basically the Treasury has to ask Congress every time that bonds can be issued or money can be borrowed. So it's kind of an issue that it sounds very good because the United States should be able to have as much debt as it can. It should be able to do what it's doing now. And that's the truth. It should be able to have all of this amount of debt and be able to run a functioning economy. But the debt ceiling really does impair that from happening, which would be a great idea to have it removed. That would probably be my yes argument, is because if we abolish the debt ceiling, then simply put, we have a more functioning economy, and we can let as much borrowing happen as long as it's approved by Congress, right? That's the way that it's put together in our Constitution. It's a very smart answer, smart approach, but that does make it a much harder process. And while the process seems like it's hard enough in Congress now, having the Treasury go to Congress, request Congress to approve borrowing is a pain in the neck. It's just a very long process. And that's why it would take a significant overhauling for Congress to overturn it. Plus, I think Congress is more appreciative of doing nothing. Is that the best way to phrase that? They don't want to go out and have to spend time and approve every single bond that is reached to them, or every single time a company or a person or a country wants to invest in the United States debt. It just doesn't make any reasonable sense when we can have a limit on the amount that we can have borrowed, and that can result in Congress not having to take any kind of action. So I think that, probably speaking, it would be very nice to have the debt ceiling abolished for good purposes. But I think the reasonable answer that ends up getting taken is no, because it ends up becoming a bigger process. And what should just happen is that the debt ceiling should be raised. With how our Constitution has put this together, and I think that New York Times article summed it up very nicely, there's nothing that we can do to make the process simpler.
I agree with the sentiment that people are probably going to answer no to this for the majority of the time, just because with the way that people think about our economy at the moment, they know on a very general basis, debt is bad. So we need to have like a cap. But at the same time, this is a should question. So that doesn't necessarily mean like, will they do it, but rather, should they do it? And is it a good idea that they should pursue? And I think in that regard, you should look at the arguments that do advocate for abolishing the debt ceiling. Some might say that that doesn't matter. Like international community, like international forces isn't just going to forget about the United States if we just like abolish our debt ceiling. For example, like European countries, they have set their debt ceiling super high. One of those countries I think I read was Poland. Their debt ceiling is super high. And so it allows for them to increase like their debt ceiling more each year. And they have like no problems with getting what they need done. And if we abolished our debt ceiling, it's not really too different from just setting our debt ceiling super duper high. Because in effect, it would just mean like we're so conscious about the debt, but we're like not going to be just spending infinitely on stuff and like digging a deeper hole for ourselves. It's just spending as much as we need to as possible. And this is like a throwback to the 2019 January PF topic, in which we talked about debt and economic growth and which one was like more important and which one should we focus on. And when you make the argument that like we should focus on economic growth instead, this is when you can say like debt doesn't really matter. Economic growth is where it's at. And what I mean by that is if you have a stable GDP to debt ratio, then your country should be fine, because if your GDP is performing pretty well, then that doesn't necessarily mean your economic stance in the international community is going to plummet because of debt. So if you're like economically doing well, then you're fine. And so maybe instead of focusing on like the debt ceiling and whatever, we should instead be investing our resources into improving our economy and making it more vibrant.
I absolutely agree with that. There is kind of one thing that is important here. I would not go out and and I know YuYu is providing like a really good example of like how high they set their debt ceilings in European nations. I wouldn't put that comparison though. And the big reason why is the United States is a much bigger country by a lot, which means that in essence, we do have to spend a lot for a variety of reasons. Admittedly, like this is kind of an important thing to note here is countries are investing in the US because I think one of the biggest reasons is they're realizing like they can get their monies back. Um, you could get your money's worth for investing in the US, right? Because we're reasonable, we're a superpower. There's allies will invest in us to keep our economy going because we continue to help support them. Sounds like a reasonable, almost like a trade agreement in some ways, but that's kind of where this topic gets a little weird is recognizing that some kind of trade, or not trade, but some kind of like impact is even if we were to raise our debt ceiling to $100 trillion for the next go, that 100 trillion could get filled fairly quickly. And that's because we're speaking about the US. And that's because when was the last time the US or you and I thought about investing in Poland? Okay. Like it's just not like a reasonable thing for us to think about. Like there's no reason to go and buy out Poland's debt and how much they've overspent. But instead, it's the United States that people are investing in. And that's kind of a pretty important point to make because more people are going to be willing to invest in the United States. And I don't know if we're number one in investing. That's not my research that I've done, but I do know that more people are interested in investing in the United States than say that of maybe just your general European nation. But it is a good way to look at it of maybe what the United States should do is no, they shouldn't abolish, to answer a question like this, no, they shouldn't abolish the debt ceiling, but instead we put an extraordinarily high number on it, such as Poland, and we don't have to worry about it for another 10 years. I think that's a better way to maybe look at it, and I think that's a very reasonable answer.
Yeah, I'll also make a note that your judge is probably going to be like, oh my God, that doesn't matter if you like, use that as your answer to the question. So I'm not going to discourage you from saying no, I'm not going to discourage you from saying yes, because I think it is a viable solution. And if you have like a good convincing way of phrasing your argument, then it might be more convincing to the judge. But when you are, making the argument, I would not immediately outright say that doesn't matter. Maybe just phrase it in a way where like that isn't as important as something else, which would make your judge listen.
I would like to add there. I agree with you. Don't just outright say debt doesn't matter. But something that you should know and understand is that in terms of a government, debt doesn't matter. And that is something that you should know because the only reason why we would default is because we break the debt ceiling. That's it. If we never had a debt ceiling in place, then does debt matter? The answer is no.
Yeah, and that's kind of like the point that we're trying to get across is like we only default because of the ceiling that we have set. So it is in essence like our fault if we end up defaulting and stuff like that. But that brings us to the second question is, would more than 2% inflation benefit the US economy? I will be upfront with you. I don't really know much about inflation other than the knowledge that I had 2 years ago, which I have not been like refreshing my memory on. So I will give this mostly to Spencer to explain and talk about.
So here's kind of the simplistic. I've got an article that I pulled up that is a lot more in detail, and I'm literally going to read right from the article because this article explains it very well. But in a situation like what we have now, inflation is actually extremely good. It sounds ridiculous to think that inflation is good, but inflation is good when you have a time like this. This is not the first time this is something like this has happened. And that's what I want everybody to know. The way that this is best phrased is inflation leads to devaluing the dollar, which in essence makes it easier to pay off debt. That's the gist of it. So I'm going to literally read from the article. This is the 9th source I've got here. This is from Investopedia. Investopedia is a very good economics-based website. And what they do is they explain kind of like investing tips. And when we're talking about investing tips, that's investing into bonds or stocks or even into or explains more about like borrowing and such. And this article is called "Does Inflation Favor Lenders or Borrowers?" And in actuality, it favors both. And that's what we're going to really look at. Is people who are putting money into the US government are also benefiting, are benefiting, but also the people who are the US government are also benefiting. Okay. So the lenders and the borrowers are both benefiting. In this instance, and I'm trying to make sure that I don't have this backwards, I'm putting my money into the US government. I am lending the government my money. The US government is borrowing my money. So the US government is the borrower. I am the lender, just to make that clear here. Okay, so reading right from the website, here we go. So how inflation can help borrowers. It says, quote, if wages increase with inflation, and if the borrower already owed money before the inflation occurred, the inflation benefits the borrower. This is because the borrower still owes the same amount of money, but now they have more money in their paycheck to pay off the debt. This results in less interest for the lender if the borrower uses the extra money to pay off their debt early. When a business borrows money, the cash it receives will now be paid back with cash it earns later. A basic rule of inflation is that it causes the value of a currency to decline over time. In other words, cash now is worth more than cash in the future. Thus, inflation lets debtors pay lenders back with money that is worth less than it was when they originally borrowed it. That uses an example of a business, but instead of using business here, we're going to think of the business as the government. Okay? The government, in essence, is having the currency devalue itself over time, which just simply makes it easier. That's the sum of that. It's better for the government to have inflation go up. And what they need to have right now is inflation to go up. Usually 2% inflation is what governments try to look at economically. They call that kind of like a healthy base of inflation. The higher that inflation goes, the better it is for the government to pay it off right now. So their debts are the debts are easier paid off with higher inflation. Wordy sentence. All right, here's how it benefits you and I, who would be the lenders. It says, quote, inflation can help lenders in several ways, especially when it comes to extending new financing. First, higher prices mean that more people want credit to buy big ticket items, especially if their wages have not increased. This equates to new customers for the lenders. On top of this, the higher prices of those items earn the lender more interest. So using an example of a television, let's say that the television increases from $1,500 to $1,600 due to inflation. The lender makes more money because 10% interest on $1,600 is more than 10% interest on $1,500. Inflation happens and the price of a bond goes up. So let's say there was a minimum on the bond, and I'm pretty sure there is. I think the minimum that you can put in a bond is like $20. I don't know off the top of my head. Maybe you can Google it real quick. But But let's say the price of a bond was to increase. So people can invest more into government bonds that are based just off of that principle. Then with higher interest rates, it actually makes it better for the lender because we will be able to get more money back after that period of time is put with the bond. So having more than 2% inflation actually is a very good thing right now. People look at inflation as bad because the price of gas goes up, or right now the price of chicken is like 50% more than it usually is. But the benefit of inflation is that it really does help when it comes to lending money and borrowing money. And having increased inflation really does make this process a lot better. Yes, it's got its negatives. Everything's going to have a higher price, right? Especially if wages are staying the same. That can become a very real problem in society. It very much is a real problem, which is how you could answer no to this question. Remembering that the original question is, would more than 2% inflation benefit the US economy? The answer is a pretty imperative yes, because it helps both the borrower and the lender, and it means that more people are going to invest money into bonds. But how you can answer no is it drives prices up and makes consumers stock up more, which means that less people are going to start buying stuff at a later date, which would also be a very easy economic principle of supply and demand. But truth be told, with more people investing in the government and realizing the benefits of what inflation creates, I actually think this answer is a very easy yes. And I think most people will look at this and answer no because they see the word inflation and they get scared. But remember that there's actually good benefits to it, especially when it comes to borrowing and lending money. And that's what I think really should be looked at. So once again, to sum it up, higher inflation decreases the value of currency, which makes it easier for the United States to pay off its debt. And at the end of the day, when we're really talking about the debt ceiling, this is what should happen so the United States doesn't really have this problem in the future.
Yeah, so I do agree with the fact that even though, I'm not really well versed in the topic of inflation, that inflation doesn't always mean a bad thing. And to be quite frank with you, this doesn't exactly seem like a close-ended question. And what we mean by close-ended questions in Extemp is that there are questions where you have to answer a certain way because that is just what has been reported and the truth. But I would be careful when you think of questions as close-ended questions because one, that could constrict your worldview, and two, that might not necessarily be the case if you just look a little deeper. So in terms of this question, it is more open-ended for me because inflation could mean a good or a bad thing. It just depends on what context you're using inflation in. And in the context of paying off national debt, as Spencer said, it could be a good thing because it makes it easier for us to pay our debt. But then again, people are probably going to say no and then bring up a whole bunch of things as to why inflation is bad that is unrelated to the context of debt. So I would just say, do your own research and be well-versed in it. In terms of an Extemp speech and you draw this question and it's your last resort, then I would say go with the easiest one for you to find information on, if that makes sense. But still take time to do research outside around.
I agree with that extensively. There's no reason not to agree with that. You should always do your research. This is a very interesting topic because, especially this question, and because most people will take the quick no answer. And there's a lot of good articles out there that can justify a no. But once again, I just read a well-versed economics website that is pretty trustworthy. Investopedia, I know it sounds like Wikipedia, right? And it's it doesn't sound very good. Investopedia is actually pretty trustworthy. There's a lot of credible backing with it, and it's used in a lot of like economic context. It's very good at explaining things. Another website I would recommend. This is a good time to recommend a few websites to look into this. Now I'm not amazing with these right off the top of my head, but another website that I'm very well aware of is The Balance. The Balance is pretty good. I think the main author for that is Kimberly Armadeo. I think it is. She is very well. She is very credible with business and economics based information. Um, Obviously, if you read The Economist is very good with economics based principles. Wall Street Journal is a good one. Um, there's a lot of like great websites that can talk about inflation, and there's just four of them that I can rattle off the top of my head. I know that all of these are extremely good. The Balance is has been argued before that it's like a blog. It's really, I wouldn't say that it's a blog. I'd say it's probably kind of in that middle range of like actually talking about economics and it being a blog. I think that it's enough to be credible because there is actual correct economic information with it. One thing to be very aware of is if it does, I think if you're not looking at the Wall Street Journal or the Economist just in general, check author credibility. That's probably what you should be doing in this instance, especially when it comes like Investopedia. I'm well aware there's some good backed up authors. Let's actually just take a look. I've got the website open right now. But what Investopedia does is it actually it reviews some of their articles. So the article that I have is written by Troy Segal, who has, it just basically says 20 plus years of experience covering personal finance, wealth management, and business news. But then it got approved by somebody who is a business executive and a professor of economics. So is this website that I just provided very credible? Yes. It has accurate approval, and in fact, it really does. Like, it's got somebody who's got experience and somebody who actually has real good credibility of understanding economic principles.
Yeah, I think like general rule of thumb, check the credibility of the author, because even if it comes from a credible source, that doesn't necessarily mean the author is credible. So I would check their credentials for sure. But I do agree, The Balance and Investopedia are really good resources in understanding economic topics that are free. Like The Economist and Wall Street Journal, while they are good, like generally good sources, they do require you to pay a subscription in order to access them. If your school has the resources to pay for that subscription, awesome, great. But if your school does not have the resources to pay for them, then it's okay to not use them. Use like The Balance, use Investopedia, use the resources that are out there and that are free generally.
And I did put a couple of books in the sources. The first one was a book that I recently just finished. I made an argument by Paul Krugman that comes right from that book. It's called End This Depression Now. It's a 2012 book that talks about how in 2012 the 2008 recession was still going on. It's a pretty interesting argument. And he is very, very smart on how he explained it. And actually there's a lot of like great information pertaining to spending and how the United States could go about solving like a real debt problem in there. So there's an excellent amount of information in there. It was one of my favorite books. He did a very good job explaining economics. Obviously, he's a Nobel Peace Prize winner in it. Nobel Prize winner. So he's very well versed in economics. I also put a book called Freakonomics by Stephen Levitt and Stephen Dubner. Now, while this one doesn't really pertain too much to the specific topic, what I will say about this book is that if you're struggling with economic principles, this is the best comparison book that you will read. not to spoil it too much, but what the book does is it takes two comparisons and it makes it really easy to understand like economics. So what they do is they take like a school teacher and they compare him to a sumo wrestler. And they say these two are the same. And here's how. And it's really good to first make you think critically, but secondly, it really does an excellent job at explaining to you economic principles in that kind of context. So Freakonomics is a very, very good resource to read. Those are two of like my personal favorite economics books. As a matter of fact, people who major in criminal justice will also have to read Freakonomics because there's stuff in Freakonomics that explain like criminal justice based issues. And that's actually kind of cool. So it has more than just an economics application. And first and foremost, read books. It's good. I know my mom is a librarian, and that's just me speaking for my mom. But here's the truth. It's actually really good. Those two books, they are very good reads. They're written very well. I get economics can be boring, but those two were some of the best econ reads I've ever had, and they weren't boring at all. I promise to never recommend a boring book in my life.
So, yeah, I agree. Read books generally. Reading books about economics doesn't necessarily mean it just pertains to one question. You'll probably get a whole bunch of economics question, especially if you're doing domestic extemp. I know that is where like economics really comes into play. And so it'll help you understand those questions a little bit better and make educated guesses in your responses, even though you can't find like a whole bunch of sources. So read books if you want to be the best extemper ever. But if you're just trying to get by in extemp, it's okay to just listen to this video and see what we have to say about it. But yeah, I think this is a good place to end the podcast. As always, if you have any like questions, comments, or concerns, DM us or I don't know, put it in the description or not put it in the description, put it in the comment section of our YouTube channel, which also be sure to check out as well. Other than that, I don't really have anything else to say except thank you so much for listening and supporting us and taking a whole bunch of information from these videos. Go get the one from in the round and just win. Like, we're here to help you win and help you move forward in your extemp career, or maybe just get by in extemp because your coach put you in it for no reason. So yeah.
Tell us what we should do for episode 10. That would be really great.
Yeah. Oh yeah, please. If you have like any suggestions whatsoever, I'll probably start doing this on my Instagram. So be sure to follow me. Also be sure to follow Spencer because we should probably both do this. But we will set out polls in asking like what topics we should discuss next, because I think it's unfair if we're just covering topics that we think are important and aren't listening to our audience. So if you have any suggestions at all, please send it our way and don't be afraid to reach out. We don't bite. I promise.
I am aware, like one thing I should note real fast kind of on social media. The social media that I have linked for the YouTube is a public one. My other one is indeed private. I do want people to like know that if you have any questions that you have for me, please send it to the public one. That's the one that I check for business purposes, especially relating to the half hour. I do try to keep an eye on that regularly. That's where a lot of the half hour questions can go. If you do end up following my private one, that's cool. Send the message there. That's fine. But that one should be Spencer_Travis_, just to publicly say that.
Yeah. And if you want to email me, my email is basically my Instagram handle @gmail.com. I just realized that, by the way. But yeah.
Anyway, as you said, thank you all so much for listening. Thank you all so much for watching or listening or however you listen to this podcast. And until next time, I will see you all later. Or we will see you all later. Peace.
Bye.